Hello and welcome everyone to the weekly Delphian meeting. Thank you for tuning in. So today's agenda, we'll go through the market update, update the earnings trays, and then Joe has some analysis he'll be going through. Let's get started. Okay, so indice wise, you can see Russell's still an 8, but SPX, that went 3, now it's 1. So kind of familiar what we saw before. Russell was 8, and then the other ones were in 1. Yeah, just kind of typical of the market we've been having for quite some time. Let me see. This one's muted. Okay. Kind of surprised Russell didn't pop out 8 yet, but especially with yesterday, but that's where we're at. Sectors, mostly green. A lot of the 8s came into 7. That's kind of system wide. Bunch of these 8s, I think we've cut in half from like that. The high, we're around 63 in state 8s, so most of those are in 7. Green pie wise, 36 last week. So we did cross over. So we're at 50, 53 ballpark right now. So let's take a look at this pulse. So that's where we were, the high for state 8s, right around 63. So almost cut in half. Getting a little upward on the ones here. I think more importantly, we had this big spike in the 7s, so that's pretty much reciprocal movement of the state 8s. So the big thing now, looking forward, let me just pull out those 8s. So you can see, just pull the ones. So now we're looking for these 5s to start moving, see if we get a sustained rally. They'll go from 8 to 7 to 5, and then, typically 1 from there. So no real movement here in the 5s, big movement in the 7s. So we'll have to see if those start transitioning the 5s, see if this rally has legs to it. So that's where I'd be looking as far as, big picture with the states. Highs and lows, just, we had those big spikes as we moved down. We made that new low in the Russell right around here. And since then, it's kind of calmed down. Had a nice high day there, kind of, which is, bullish. Back here, we started getting highs as we ran up. So, could be the start of a bullish run, but you never know. So another thing, just kind of, glance at, from time to time, see whether, what the trend is. And this really does help, which one's on top, whether it's bullish or bearish. And, if we start getting big spikes, kind of look out. And, back here we had nice spikes with the highs. So, but those don't really start happening until we get a lot more at state 1. So, back here we had, excuse me, they all kind of line up. We have 30% state 1s, get up 40 something, making new highs back then. So, when those state 1s drop, we don't really have an opportunity to make, a lot of new highs. So then, the 8s popped, we're up in the 50s, and, so this all kind of lines up well. But, we'll have to see how these transitions come overall for the states. So just do a quick peek at bullish bearish. So we did get the cross. So, not all crosses are fantastic. So, sometimes, we'll get like this. That's kind of what you want to be guard on, if you're bullish. But, it's nice to see good follow through, kind of on these. So, we'll just have to see, but it did cross over nice bullish sign overall. So I think, everything kind of lined up. We'll just have to see, if we get continuation from sevens into fives and, the bullish numbers getting higher. So let's look at SPX, just went into state one. So, our typical pattern, kind of run up in resistance, retest, get up to the average move, and then, like 20, 30% higher. The rest of them, they come back down. So that's where, just at the beginning, obviously an uptick is nice. This is initial support. It looks like we're going to break above that, at least so far today. So let's just call it 4,500. That 4,600, that's the recent high and the top of our range also. This is the range 42, 46. So that's not quite up in, this kind of area. The target area right below that's at 46. So I'd have to make new highs there, which I think will be tough, but that's our support, obviously resistance right in here. And, even before these, targets, you got 4,600, which I think is more important than, this kind of range of targets. So that's what I'd be looking out for. If we continue higher, 4,600 is going to be the big one. Getting above that. So, all right. Okay. Yeah, like I said, I'll just pull up. Here's the chart. So there's our 46 right there, and 42. We had a quick dip below, but ended up, coming right back. So we're above 50, above 200, above pretty much everything. So, here's the high there, 4607, to barely broke it and, got crushed. A couple days here, this kind of in the neighborhood, and then turned back down. So if we make another run up there, getting a closing, staying above 4,600, be very bullish overall for the market. But you can also see here the 50 days starting to turn up. So staying above that obviously would be bullish also. So that's kind of the quick on SPX. So there's the old Russell still in 8. Obviously been there a long time. I wouldn't expect this to be, in 8 in the next few days. I expect to transition. So, got above this kind of resistance. So, on entry, tried to get above that entry price. It's called 1793. Failed, came back down, did kind of the typical pattern for 8. But you can also see, this entry price, at least right, these two right here were resistance, to the upside. So getting above that here, obviously key, staying above it. We're above it again today. I would expect transition, into 7 here very shortly, next day or two, I would guess. So let's look at the chart. So this is just a crazy chart, if you ask me. So here's our 17 down here. Here's our 19. And we got our tops. So third top. Sorry. So we from those tops we all went down, retested, hit 17, and down, kind of retested, hit 17, down, retested, hit 17. So from there, this one's kind of mirroring, the first one here, kind of bounced up, retest 17, popped up. So same thing here, kind of dropped down, retest 17 popped up. Looks like we're above 18. So you can see after these run up, it runs into strong resistance in that 19. Same thing, runs up to 19, strong resistance, strong resistance. So this one actually pulled way back, strong resistance, eventually broke here. This one, a little bit of a pullback. So, I mean, all of these are just very, very similar. So, I think, what it's telling us, if it continues following these patterns, obviously we're going to walk our way up to 19, have a real big problem at that 19, kind of pull back and forth, and then, eventually break it. That's what all of these have done. So, if it follows that pattern, I'd expect real strong resistance, the first couple of times up here, 19, maybe some more pullbacks, but, we could even see a little more kind of chop here, but, kind of seems like, once it gets over this 1800 level, if we stay above that, I would expect it to, kind of gravity, pull it up, for that 1900 test. So, sorry, a lot of writing, scribbling here, but that's kind of how I see this. But obviously our range, you guys should know this by now, it's 19 to 17, so we're smack dab in the middle of that. So we'll see if those, like the 19 and 46, kind of come up at around the same time. The 4600 for SPX. If that range and the 19 kind of come up at the same time and line up, and obviously it'll be strong resistance for both of those. So that's where I see that. We had a nice drop from the 10-year. I think we're kind of near the current floor for things, 4 or 5, but, dropped from 5. We were up around 5. Now we're, hit that 5, right? 4997. So nice 50 basis point drop. Obviously, the market really liked that. So, dollar, pull up a dollar real quick. I think that took a hit the other day. Yeah, kind of topping out here, right around 30. So, those typical headwinds are, I think that's the impetus for things, that big drop in the market rally. So, what to see how rates continue to do. Let me pull up Fed. So next meeting, 100% no hike. And I think they're, walking down the cuts even more at this point, from where they're at. So, this is kind of the average 4.5. So now it's down to 4.25. So another quarter lower. So this would be basically a 1% cut from in about a year time frame. So that's what market has priced in. Just quickly on balance sheet. I didn't check this earlier. Yeah, just, they're continuing. Nothing much, no big, just kind of general walk down, same kind of glide slope. Okay, so I do have some interesting charts. So going back in the time machine. So the first time I showed you this, guys, about a year ago, the M2 versus CPI. So this is back here, and we, basically talked a lot about, what these are, what they mean, and basically laid out this chart. This is where CPI was, and they lag, the M2 by 16 months, basically. See, that's how long it takes to filter things through the economy. So here was the update. This was May 10th. So went from here to here, CPI, and drum roll. Where'd it go? I just clicked it. Here we go. So now down here to here. So you can see, I think more importantly, yeah, we're negative money supply at this point. So if this continues, at some point CPI is going to drop negative, over this time period. That's what, if the correlations keep up, kind of this closely. That's what, so negative. So that's disinflation, potentially. So that's what I kind of want to point out. If this follows, if they continue, M2 money, contraction, that's kind of, and this correlation holds up, that's what we're kind of looking for, in the future. At that point, obviously, the Fed would be cutting rates. One other kind of, you can pull those charts, obviously, from the they're in the web of the friggin' Fed web of documents and stuff, but the debt clock has it too. You can see, the money supply is decreasing here. Obviously I pulled this up from time to time, but it's obviously still decreasing. So just wanted to point that out. Thought they were very interesting and wanted to update you guys. Trying to do that like every 6 months or so. So that's all I had on the market. Any questions, comments?
The M2 versus CPI is very interesting.
Mm-hmm.
Took the words right out of my mouth, Sudhir.
Yeah, let's see if the
Also,
correlation.
you guys did some analysis of how long, when the green pie was under, I think 15, how long it stays there.
Yeah.
And has anything been done on the other side, like when the green pie goes over 70 or something like that?
Yeah, Joe's been doing those. I don't. He might have done something. Go ahead, Joe.
Yeah, that was a while ago. I honestly don't remember that. Remember those numbers off the top of my head. Obviously, we're not there yet, but I will go back, track that down, and in the weeks ahead, give us something to look forward to if the market's going to continue up.
Yeah, I thought I remembered something, but I couldn't. It's been a while, so I wasn't sure.
Yeah, I did it just like the 15 and 20% Sudhir. I took 70 and 80%, on the upside. So I'll go back and track down those numbers.
Yeah, that would be very interesting.
Okay, thanks, Sudhir. Anyone else? Questions, comments? Okay. Let me pull up. This is earnings. So I think we were done with the bullish pre-runners. Bearish pre-runners. There's one active. It's down a little bit right now. Pretty much flat for that. Overall, Best Buy. I think that's what that one is. So you still got, next week that'll close out before earnings. Bullish runners. It's only a bearish trade. So we got 9 closed, $700 profit so far. There's still some of those trades to come. We had two losses and 7 wins. So holding all right. The bearish runners, we had a nice day. And then the market just turned. So last week we talked about it'd be nice to get some of these. So we're able to close out quite a few of those. Last week, 9, 13, 9. So we got quite a few of those closed out, but the market obviously rolled over. Turned higher after those kind of bearish days, and this thing's turned negative again. So still got a few trades open here.
Yeah, I'm having the same experience with the bearish runners.
Mm-hmm.
They're having a tough time right now.
we needed like another day or two of bearish, but everything kind of turned on like that Friday. So
Yeah.
yeah. And then this non-movers. So that's I think the only losing one right now, the bearish runners. And then, this one, FNV, I mean, it's like real close. So, I'd probably hit intraday, for a profit target, but, these are doing fine, other than that one bad trade, got crushed. That was a max loss. So the other ones have all been, good. So, but you can expect that. I mean, you're going to lose one of those, hopefully not max loss, but, the risk reward on those is, really good. Pull it up. So like here, I mean, you're risking 1134, your max profits pretty much like over double. So that kind of risk reward, it's just, if it gets outside those bands, this one really tried to come back to, I mean, it closed that Friday right above 57.5. So, but the other ones have done good. So not terrible. Yeah, I mean, obviously not a banner earnings so far, but I think we're net positive, which is always, a good thing. So, all right, any questions on that? Okay, well, that's all I had. I'll turn over to esteemed colleague Joe.
All right, Mr. Josh, thank you. As always, well done. I think before I jump into some charts, kind of complementing your CPI M2 chart. And I've talked about this before, but just, for everybody, obviously, in so many cases, the devil's in the details. And I've mentioned, Brian Westbury before, but this is where you can track down their, complementary insights into, the releases. And so, you go to First Trust, it's ftportfolios.com, and, just the insights on these, releases, I think are just absolutely outstanding. I mean, you can get carried away depending on how much time we all have to, get into the weeds with some of this stuff, but, they do it for us. And just a couple things. I mean, we go back to, it's almost, I guess, Thursday, Friday of this week will be 3 weeks, that the market basically has been rallying. S&P's up around 10%. I think the NDX about 7.5%. The Russell on a percentage basis, a bigger rally than all of them, up 13%. So just a monster move in under 3 weeks. And the catalyst on Friday the 27th we've talked about seemed to be non-farm payrolls coming in at 150K. That got things started, and different details in these releases, the last couple days. CPI, they talked about, and again, I'm referencing the First Trust, comments, energy down 2.5%. But, one thing that's interesting, and Josh talked about this last week, I think, the rental market is a big driver of these inflation numbers. And, coming out of the CPI report, they've got rental inflation on a month-over-month up 0.4%, and up about 6% annualized. So that's an area where maybe there's going to be some favorable tailwind for the CPI numbers going forward. In the PPI, the energy numbers over the last month were down 6.5%. So just the comparison, CPI versus PPI, you're talking, a solid 4% in terms of, the numbers themselves. First Trust says gas was down 15% over the last month. And then something that I thought was really interesting, go going forward, you may get some moderation in some of these inflation numbers also, because it was a little over a year ago that you got spike numbers in inflation due to the Ukraine invasion. And it's been a little over a year now. And some of those spike inflation numbers on a year-over-year basis are rolling off now. So, just a lot of detail in these numbers. So I just want to make sure you know where to get them if you're interested. Let me go to a couple charts. There is our overall homepage. And by the way, Sudhir, I can go through a few 80% pie numbers, but since you asked that question, I went through some notes, found some stuff. But our last high, we talked about this last week, we basically had a 3-month correction in the market, topped out either July 19th or July 27th. The pie that day, according to my notes, green pie, was at 59%, for that intermediate high back in July. And then bigger picture, and it looks like back in early February of this year, we've reviewed the bullish pie above 80%. And let me see, in 2022, there were only 4 days. In 2021, there were only 25 days. In 2020, there were 46 days. I have each year, so maybe I can put that, together in a document. Looks like in this year, only 1 or 2 days, above 80%. And I'll have to go back and check because this is dated February 1st. So, it's a pretty rare occurrence. Let me see, where are we here? We are at 52%. So, we've gone from the lows of 14% in mid-October, and then we were 14.97. October 27th, we're already up to 52%. Markets rallied those percentages I just spoke about, and we're very close to the green pie at 59%, which was the number for the July 27th high. So, that pie was your idea, Sudhir, and it's a good overall measure of sentiment for sure. Speaking of sentiment, AAII, and obviously this is kind of a slow-moving thing, hard to really take too much out of it. But what I found going back was just, a lot of the price lows were early to mid-October. Then we rallied a little bit, and then we had a little bit of a low at the end of October. But all the while, bullishness, was declining in AAII, bearishness was increasing, and then we got a pretty good reversal. So didn't necessarily get to highs or lows for the year, but it looked like clearly the market was looking to make some kind of significant bottom, which it did. And I must say, I've heard you say, or I've told you before, I DVR Kramer. I listen to him not frequently, but on big days I try to get in and listen to it. And he was talking about that S&P oscillator all night last night, and how it basically pointed to a low back October 26th, 27th when we got the lows. So he was espousing the S&P oscillator, which I don't know if any of you have access to that, but that is actually an overbought status at this point. I looked yesterday, it was 4.5, so getting very close to overbought. Just a few charts, not really much to add. Josh always does such an excellent job, and I'll go through some of those same charts that he pulled up just to pull them up. But TLT, we talked about it last week, expecting some kind of rollover, which we got. I wanted to go back and look at the max moves. The max move was 2020. It went, that state 8 right here. And I think we went 128 days, in state 8. We got another long state 8, on the way down through 2022. And this last one went 92 days. So, the longest on record was back here in 2022, the state 8 and TLT. I think it was 128 days. We got 92 before we just rolled into, target 7 here. I noticed when Josh pulled up, the current home screen, all of the bonds are in state 7 now. That's, I think, worth watching just to see if, we get any tailwind there. Not really much to add with what Josh talked about. 4,600, recent highs, the all-time high going back to January 3rd was 48.18. So if we get through 4,600, next stop's going to be 4,800. I think if we're going there, it's like we've been talking about, going to be driven by earnings, and we shall see. But 4,600, with any kind of move to the upside, next target will be 4,800. And let's see, NDX. Again, Josh was talking. I think we were just 16,000 was the recent high in NDX, just shy of 16,000 on the 19th, because it was NDX that topped first, in this intermediate high back in July, topped on the 19th of July. S&P, I think, was the 27th. That topped at 15,932. We're about 100 points shy of that now. And got this longer range chart up because if you go back to the all-time high, we're at 16.6 as the all-time high in December of 2021. So not far off for sure. And, if, the thing that's so different now, I think is, we pull this up frequently, the expectations for previous quarters were earnings contractions. We got that in the first and second quarter. Third quarter, we still got some numbers to come in, but there's going to be earnings growth, year over year, 3-4% is what they're looking for. But, the fourth quarter, looking for significantly more than that. The consensus seems to be a little over 4%. Yardini's talking double digits, which seems, rather outrageous. But, Yardini, it was a few weeks ago, talked about a 4,600 target for the S&P at the end of the year. And we're not far off from that at this point. And then, we'll see when, at some point, if we get some adjustments to the 250 expectation for Yardini and the 245, for the consensus. I guess that would come, sometime maybe in the fourth quarter, beginning of the first quarter to get a revised estimate for those numbers. Just a couple more charts. So again, NDX, it's basically 15,932 was that recent July high, and then 16.6, for the all-time high. Russell, really nothing to add, beyond what Josh talked about. You get through, 2000, you're basically talking about the, and we had that, I think, spike high at, 2008, maybe, that false break, and then the all-time highs, 2405, going back again to the fall of 2021. So that's a long way off in Russell for sure. The first hurdle is, Josh defined, 1,700, 1,900, and then ultimately 2,000. XLK, we've been talking about, continues to be leadership, all-time high in XLK. We did, get a closing all-time high, I think, last night at 182. So we'll see if that thing has legs. You would think it would be due for a pullback at some point, at least a little bit of a breather, but who the heck knows? The trend, obviously, to the upside. What I didn't mention that I wanted to, and it relates to XLKs too, and XLK was the first one to go into state 1, followed by NDX the following day. We're 7 days into an average 41-day run in XLK. So not to say we're going to head, straight north, but, we still got, a few points of that target 3. You would think that's going to be natural resistance for XLK. Maybe that's where we get, the breather for a period of time, but long way to go in terms of time with XLK. I'll go back to SPX because the same darn thing was just yesterday. We went into one, but very similar length of time, 43 days, for SPX. If, potentially, we could have a pretty constructive market, well into, the end of the year, which is obviously seasonally positive as well. Let's see, this is, XLC, nowhere near the all-time high, like, XLK, little different makeup there, with, I guess it's Tesla and Google, not Tesla, excuse me, Meta and Google versus XLK. So I think that's kind of all I wanted to review. Happy to talk to anybody, any comments or questions. When we get spikes like this, it's always interesting, and we'll get this more organized for you in time, but just to keep track the number of transitions, state 8 and state 1, as Josh was pointing out earlier. We got 96 yesterday, state 1 transitions. So happy, as I said, take any comments or questions. Otherwise, back to let's see, just a few numbers, not certainly like the major numbers we had over the last couple days. Over the next week, jobless claims tomorrow, housing starts Friday, Philly Fed on Friday, and then a handful of different numbers over next week. And there are a few Fed governors out there doing some talking too over the next few days. So a couple other things that could move the markets. That is it from here.
Okay, thanks, Joe. Anyone else, questions, comments before we wrap it up? All right, well, thank you all for attending. We'll do it again next week. Thank you.
Thank you.
Thanks, guys.
Bye-bye.